I don't think so. I don't know. That's a question for her. Sure. Facilities business. We just want to make sure that he's talking to the. Put a camera in at the other end?
No, so there's about one, but I can move the joystick so like it comes on.
But you can't see the person.
It was either this or
Yeah.
Good evening. Purpose of this meeting is to conduct business in Gettysburg Area School District. Public comment is welcome and issues will be referred to the appropriate board committee or administrator. Comments will be summarized in official board minutes, which will be made available by contacting the business office. Please take a moment to silence your cell phones or any other devices. Roll call, Ms. Collins, everybody is present. Please stand for the Pledge of Allegiance.
to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Under number 3, no notices or communications. Citizens' participation, it's my understanding, we do not have anybody this evening. Thank you. Routine approvals, 5.1 through 5.9. May I have a motion?
Mr. President,
Mike?
so before we get started with that, I'd like, due to timing issues, I'd like to make a motion to move item 7.1, which is listed as an informational item, to section 6 for items for board action. I don't see any reason to wait on that one. I think we could go ahead and do that one.
Well, we have 2 on the second. Questions? Roll call. Emmett? Yes. Mike? Yes. Al? Yes. Amy Beth?
Yes.
Tim?
Yes.
Ryan?
Yes.
Michelle? Jeremy?
Yes.
And I vote yes. Noted that informational item 7.1, resolution of termination agreement, will be moved to an action item for this evening. Routine approvals 5.1 through 5.9. 5.1 will now include on the agenda the resolution moved to the action item that was just voting on. May I have a motion?
So moved.
Second. Question?
I had a question on 5.8 for Dr. May, if possible. There can be, there was 23 students that I saw on the list. I know that I'm only there for a short period of time, but that seems to be reflective of what we've seen in prior years.
Yes.
I was just trying to get engaged for if that was a roundabout number. Thank you.
You're welcome.
The 5.3 and 5.4. 5.3. The request for tax assessment thing, is that something that's standard about? Or is that something that happens often, or?
Well, in this particular case, there are actually one lawyer representing 2 different hotels. One is the Country Inn and Suites, and the other is the Hilton Garden. And those tax assessment appeals were based on appraisals produced by the owner's appraiser. And the county and the school district, there are three taxing bodies, but the township never really participates. It's really the school district and the county that team up and deal with these matters. The county and the school district hired its own appraiser, and based on the appraisal done by the owner and based on the appraisal done by our appraiser, they were significantly apart. We entered into an agreement with the owner that put us just about halfway between the two. The biggest, it's based on income, and guess what happened a couple of years ago, in the last year or so? Income in this area for motels and hotels just went way down. And the question is, how quickly will that recover, et cetera? We just made the assessment that in court, it would be difficult to convince a judge to do anything but split the baby on this. So we thought that a settlement made sense. The judge could always go with the lower figure as well. So we thought the settlement made sense. The other thing is the county has approved this. The county's going to go ahead with it. So if we don't approve it, we're on our own. As before, we were together, but we'd be on our own. We'd be the sole taxing body to be fighting it. And it's expensive and it's difficult for a judge when he's confronted with two experts who are giving different opinions to do anything but compromise.
Yeah, now is that, the appraisal number we got here, is that less or more than before? You know?
Oh,
I mean, it's less than the original tax.
Yes, it's gonna be, there will be, and I don't have I do have the figures in my file, but I'd have to pull them out. The county assessor, Darrell Crump, always runs those figures, and I thought that there had been, here, the information is for the Country Inn and Suites, it's about $13,388 in reduced Gettysburg School District tax revenue. And for the Hilton Garden, it's about $12,502. If we went with the owner's figures, those losses would be double. If we prevailed, actually, our appraiser came in lower than the current appraised value. So here's the current appraised value that they've been paying taxes on. Here's where our appraiser came in. And here's where their appraiser came in. So even going with our appraiser, there would be a reduction in taxes, but not nearly as much as with the owner's appraisal. And again, this is about midpoint between the two appraisers. I mean, there's nothing fun about this or good. I mean, it's but it's the reality.
Thank you.
Are there any additional questions on the routine approvals? Hearing none, roll call. Jeremy?
Yes.
Michelle?
Yes.
Ryan?
Yes.
Tim?
Yes.
Amy Beth?
Yes.
Al?
Yes.
Mike?
Yes.
Simon?
Yes.
And I vote yes. Number 6, items for board action, 6.1, may I have a motion?
So moved.
Question on 6.1, budget fiscal management resolution. Hearing none, roll call. Amy Beth?
Yes.
Michelle?
Yes.
Al?
Yes.
Simon?
Yes.
Mike?
Yes.
Jeremy?
Yes.
Ryan?
Yes.
Tim?
Yes.
And I vote yes. 6.2, capital improvement program, motion, please.
Second.
Question?
I think, just for clarification, this basically says we generally support the capital improvement plan over the 5-year period, 2022 through 2027. But it doesn't commit us to any specific item, I don't think, am I right? It's just that we are giving our best blessing to the plan.
It's my understanding, I don't know, maybe Jason can further, is back when this capital improvement program started years ago, it was somewhat of a roadmap for the board to plan in the future with the administration and the needs of the district, and that the board, as it sits today, is not obligated to adhere strictly to the plan, and if my memory serves me right, oftentimes in a given year, things are moved as they come out of, not only from management, but from our committee, are moved either up or down in a particular year based upon what the needs of the district is.
Right, it's basically a approval of a roadmap, with more specific information being taken into consideration for kind of the next fiscal year you're looking at. Because that should be more accurate than, say, 3 or 4 years out. But those items will still come up, especially with larger dollar figures for board approval again in the future.
Thank you.
Hearing nothing further, roll call. Timon?
Yes.
Mike?
Yes.
Al?
Yes.
Amy Beth?
Yes.
Tim?
Yes.
Brian?
Yes.
Michelle?
Yes.
Jeremy?
Yes.
And I vote yes. 6.3, the 2022-2023 school calendar. Motion, please.
Motion.
Second.
Question?
I just have a question.
Amy Beth?
I didn't plan on the question, but I happen to have 2 people that asked separately about how many days we had allotted for virtual days. So I think this is the most appropriate time to ask you. One thought it was 5, another thought it was 12, and I knew at that point I needed to at least ask if that was something that was put forth to the union, or whether we've established how many virtual days we will allow. And I think that right now we're going to handle.
The virtual days are generally, if you take COVID completely out of the mix and just deal with, say, snow days, you're approved for basically what are called flexible instructional days, and there's 5 of them. But if you recall back, right at the beginning of the school year, the board approved what we called an emergency instructional template. And that gave districts greater flexibility this year than like a normal year to use those as we need to. But normally, if you talk just weather, it's 5.
Any additional questions? Hearing none, roll call. Amy Beth?
Yes.
Michelle?
Yes.
Al?
Yes.
Tim?
Yes.
I'm sorry, it's Tim.
Yes.
Mike?
Yes.
Jeremy?
Yes.
Ryan?
Yes.
Tim?
Yes.
Me? I vote yes.
You've never done that.
No, and I haven't said Tim and Tim. I got confused here this evening too, looking at my paper. Trying to jump ahead. 6.4, policy 626, federal fiscal compliance. Motion, please.
So moved.
Second.
Question? Hearing none, roll call. Jeremy?
Yes.
Michelle?
Yes.
Ryan?
Yes.
Tim?
Yes.
Amy Beth?
Yes.
Al?
Yes.
Mike?
Yes.
Timon?
Yes.
And I vote yes. 6.5, policy 701, facility planning. Motion?
So moved.
Second.
Question? Hearing none, roll call. Timon?
Yes.
Mike?
Yes.
Al?
Yes.
Amy Beth?
Yes.
Tim?
Yes.
Ryan?
Yes.
Michelle?
Yes.
Jeremy?
Yes.
And I vote yes. 6.6, policy 702, grants Gifts, grants, and donations, motion, please.
Motion. Second.
Question? Hearing none, roll call. Jeremy?
Yes.
Michelle?
Yes.
Ryan?
Yes.
Tim?
Yeah.
Amy Beth?
Yes.
Al?
Yes.
Mike?
Yes.
Tim?
Yes.
And I vote yes. 6.7, policy 703, sanitary management, motion, please.
So moved.
Second.
Question? Roll call. Amy Beth?
Yes.
Michelle?
Yes.
Al?
Yes.
Tim?
Yes.
Mike?
Yes.
Jeremy?
Yes.
Ryan?
Yes.
Tim?
Yes.
And I vote yes. That brings us to the addition, which I'll, for the record, put as 6.8, moving 7.1 informational item by motion and passed by the board to an action item. It's the resolution to terminate agreement, resolution to terminate agreement with Cumberland Township for school resource officer services. May I have a motion?
Motion.
Second.
Question?
Just for clarification, curious, and I apologize if this was mentioned before. So when would be the last day that we would get any services from Cumberland Township for policing services?
Based on this agreement, I believe it's February 25th.
Oh, gotcha, that's it. Thank you.
I don't have a question, but I have a comment.
Mike?
I was going to share this with the taxpayers and the community of Gettysburg Area School District for the reason we're terminating this agreement. There were some issues that came up. The township made a decision that kind of put the district in an interesting situation where we didn't have an SRO for a few days, and they tried to backfill with resources that they had. And back in November, we renegotiated and extended the contract. So the original SRO contract that we have currently was set to terminate in June, into June, and then we were going to extend that for 4 years. But they did not have the staffing, the qualified staffing to provide us that had the necessary SRO training. And both parties decided to move apart since they would be able to fulfill the contract. So this is just not a decision that is making arbitrarily. There is some context behind it.
Any additional questions? Roll call. Jeremy?
Yes.
Michelle?
Yes.
Ryan?
Yes.
Tim?
Yes.
Amy Beth?
Yes.
Al?
Yes.
Mike?
Yes.
Timon?
Yes.
And I vote yes. For the board, I believe, as a part of that motion, there will be a document that we'll take care of this evening, and that'll be forwarded to Cumberland Township with what our board action was. 7.2, Smith Elliott Kearns Company LLC presentation. Good evening and welcome. It's not like I have not seen you here before, right?
I don't know. I think I might be a VIP at your meeting, but glad to be here.
Well, if you're going to bring, are you bringing decent news?
Of course, always
Okay.
good news, yes.
Okay.
I think we can always look at things positively. That's coming from an accountant, so. For those of you I haven't met before, Krista Gardner, I am a partner at Smith Elliott Kearns, or SEK. I am here to do an overview of your June 30, 2021 audit. Where we are in the process of the audit is we are almost done. We have a couple of loose ends that we're tying up, and specifically wrapping up our testing related to the federal grants compliance audit piece. So we are in the process of wrapping those items up and expect to have a draft of the financial statements within the next week and get things finalized so we can put June 30, 21 behind us. What I'm going to do is just a high-level review as I have in the past. Just a reminder, I did meet with the Finance Committee 2 weeks ago, I think it was, to go into a little bit more detail. But we're going to talk about what an audit is, just some reminders about what we do as part of our financial audit, and then some high-level results. Please, if you have any questions, let me know. So just a couple of quick reminders. As your auditor, we are responsible for performing our audit not only in accordance with generally accepted auditing standards, but also government auditing standards and uniform guidance. Those last two items are additional requirements because of the grants you receive. So since you receive federal grants, there are additional requirements that have to be followed. And there's also a whole different section of the audit that has to be performed. That's that federal grants audit. We got to test additional grants this year related to the ESSER funding, which is actually one very large piece of funding and then two smaller ones that get folded into it. So in addition to our normal federal grants testing that we performed this year, we also got to test that ESSER funding. And so that's what we're wrapping up in that case there. In addition to testing of those transactions, we also have to test compliance and controls related to those transactions. We, as your auditor, are responsible for expressing an opinion about whether the financial statements are materially correct, fairly presented, and conform with what we call US GAAP, or Generally Accepted Accounting Principles. And then I am required to communicate specifically to the board significant matters. I'm doing that this evening, but then also once the audit is finalized, this presentation will be updated with all the final dates, and you will have that copy, electronic or printed copy for yourself, as well as the financials. I always like to remind everyone that an audit provides reasonable, not absolute assurance that the financial statements are free from material misstatement. What that means is during the fiscal year 21, myself or a member of my team were watching everything that happened. And then when it comes audit time, we don't test 100% of the transactions that occurred during their fiscal year. That would be almost impossible, very time consuming and very expensive. So it's really up to us to design our audit and perform the procedures in order to give that opinion. And that audit looks a little bit different every year, but the bones or the base of it is pretty similar, and I'll get into that in a moment. And just a reminder that having an audit does not relieve management or the board of their part of any of the internal controls related to your financial reporting and management. The district's responsibilities are preparing and fairly presenting the financial statements, designing, implementing, evaluating, maintaining effective internal controls over all aspects of your financial reporting and transactions, providing us with unrestricted access to anything that we might need during the audit. If there would be any fraud, illegal acts, significant deficiencies, or material weaknesses, making us aware of them. We were not made aware of any. During the subsequent event period, so essentially July 1 of 21 up through when we date the audit report, that's called the subsequent event period. So if there's anything that happens during that time period that can influence someone reading your financial statements, we have to consider those for any potential accruals or also any potential disclosures. And there's nothing at this point that we have identified that would be included as a disclosure. And then all of this is wrapped up into a management representation letter, which is that last sign off on the audit, which we'll be doing here in the next week or two. Audit scope. So what goes into an audit? So the first thing that we always do is we want to know what's changed, what's different, what do the processes look like, what internal controls have changed, what people that are part of those processes have changed. Has a pandemic happened that has caused things to be a little awry, which at least for fiscal year 21 was a little bit better than the year before. But that's what we always start with, is what's different, what revenue sources are different, what big expenses, what contracts, because we want to start to come up with an expectation as far as what we see compared to prior years. What we then do is we essentially take that assessment and we identify what is our risk assessment. So that is required in every single audit that we do. We have to identify what areas are of higher risk. Not saying that anything has happened or anything would happen, but we have to put that auditor hat on and say what could go wrong. Based on that, we design our audit procedures, and we always have to have what's called an element of unpredictability. I cannot test the same accounts, the same transactions, the same thresholds each year. We have to switch it up, and that's essentially that element of unpredictability. How we then determine how much we're going to test is all based on what we call materiality. So that's really what number and then also qualitative information would impact someone reading the financial statements if they were wrong. And that's where we're going to develop different thresholds by each fund based on the revenues. We do calculations. That's going to help us determine over a certain threshold, we're testing everything. Under a certain threshold, we're going to pull a sample of that population, do our testing based on that results. Then we decide, okay, we're good to move on, or you know what, let's do a little bit more testing in this area. So that's kind of how our brains work and how we put together the audit process that we go through. Adjustments are usually part of the audit. We actually have very few adjustments to date. In fact, they're all immaterial, really just some reclassification in some of the grant areas, which is great because what that means is the financial information that you're getting throughout the year is pretty current and up to date. I can't tell you how many times I go into an audit and I, have proposed entries of 20, 25, 30 entries. That's not a good sign for throughout the year when you're making decisions based on your financial information. So not a lot of adjustments. I don't have them attached here today just because they're not final, but those will also be included in this communication when it's done. So I have expected, and obviously draft on here since we're not final, but essentially the expectation is an unmodified opinion on the financial statements. That's a clean audit opinion, 2 thumbs up, no change from prior years, the best audit opinion that you can get. So kudos to everyone involved in the district. I'm going to blow through these couple items pretty fast because they're really just required, but no changes. As far as significant accounting policies, there was really no new policies during this fiscal year under audit. That means the way you recorded transactions, there were no changes to those policies or any kind of GASD pronouncements that came out that changed anything. Estimates are always a part of your financial statements. Some of the estimates that go into your financial statements are going to be uncollectible taxes, anything related to compensated absences liabilities, pension liabilities, or OPEB liabilities, all of those assumptions that are made and go into the actuarial valuations, those are all considered estimates. Fixed assets, useful lives for calculating depreciation, and then plan con receivables. Until you receive that money, it's essentially considered an estimate on any of those plan con receivables, and so we do have that here. As part of our audit process, we have to consider those estimates, essentially assess them for reasonableness, and then we kind of keep track of them as they go to see, did anything come in way off that we need to consider going forward, but no changes there. As far as the significant kind of disclosure items, once you get those financial statements, your long-term liabilities, which is going to be your debt, your compensated absences, the defined benefit pension plan, your retirement plan, and then also that other post-employment benefits plan. So pension's going to be salaries after retirement, and then OPEB, as you'll hear me call it, is essentially all of the benefits after retirement. Those are really those big dollar item areas on your financial statements and have a lot more of that sensitivity as far as those actuarial valuations, etc. The financial statements, when you get them, all of the financial statement disclosures, we have to assess to make sure they're all there, they're clear, consistent, and they're complete. No difficulties encountered, no disagreements. Essentially everything that I have in here will be signed off on management, as I said, and you'll receive that final copy. And then these are kind of our no other issues, anything that I'm required to disclose I've included. And then we always do like to point out in your audit opinion, you do have what's called required supplementary information and then other supplementary information. The management's discussion and analysis, that is the piece of your financial statements that actually precede your financial statements. That is from the district, so it's actually directly from your management that essentially talks about the year. We call that required supplementary information because it's not a part of the core financial statements, but it is required. And essentially we just talk about that, although our opinion is not on that, we essentially do procedures that cover to make sure that the information in there ties to the statements which were then audited. It's a lot of that legal jargon that we have to include in there. Matters of internal control, as I stated, we have to understand what the internal controls are. What are the processes, what are the procedures, and then we actually do some control testing. That's going to then help us kind of pave the way for what other testing that we do. If we are aware of anything that's a material weakness or significant deficiency, we are required to communicate that to you as the auditor. It's one of those things where I can't stand here and say there are no material weaknesses or significant deficiencies, but I can say I'm not aware of any material weaknesses or significant deficiencies. Again, one of those legal items. All right, so now I'm going to jump into the numbers, and hopefully I myself can, let me see if I can make this any bigger.
It's up top in the, yeah, there you
go. There we go. All right, so financial highlights. I'm first going to start with the general fund, and bear with me, I'm going to walk you through, essentially, I know there's a lot of numbers up here. A couple of reminders, general fund is how you budget. It's the base on how you budget. It does not include things like debt, fixed assets, pension liabilities, compensated absence liabilities, OPEB liabilities. It includes debt to the extent where you pay principal and interest. Those expenses are in here, but as far as carrying those items on the books, it does not include it. So it's directly related to how you budget. We call it the modified accrual basis. So what we're looking at here on the left-hand side is your final budget. We call it final budget because you have an original budget and then you do some budget transfers throughout the year. this is that final budget. Middle column is the actual, what happened, the results. And then that right-hand column is essentially the variance. First line here, total revenues, we budgeted 64.2, and I'm just gonna round because it's a lot of numbers. We budgeted 64.2 million. We came in at just over 65 million of revenues. So that's a positive result of about 850,000 of revenues. Under our expenditures, budgeted 62.3 million. We came in just under 65 million. So that's a positive swing of 1.3. So essentially we budgeted expenses over what actually happened by about 1.3 million. That brings us down to what we call this excess or deficit of revenues over expenses. But then we have things that are other financing sources and uses. So they don't fit into the revenues or expenses category. These are going to be things like transfers to other funds, budget transfers, sale of fixed assets, those kind of oddball items. And as you can see here, when we add that in, your total budget for fiscal year 21 was a use of fund balance value by about 5 million. So you budgeted to use fund balance by about 5 million. You can see here in this pink color that our actual results were a use of fund balance of about 1.3 million. So what that does is it takes our beginning fund balance from about 24.9 million down to about 23.6 million. The reason I have this highlighted and then I have this blue item with an asterisk over here, as you can see, what this looks like is we actually were under budget in this other source or other uses category by 1.5 million even. And that's because that budgeted item was a non-cash item. So what that was is a budget to move 1.5 million from your unassigned fund balance to your committed fund balance towards capital projects. It was earmarking that towards future capital needs. So we included that in the budget because essentially it's moving those monies or earmarking those monies towards that future use. But in all reality, we did not send cash anywhere. And so that's where it's a mix of cash versus non-cash, and I wanted to highlight that here. When we take that factor into consideration down here, and you take the actual use of that fund balance of 1.3, you add in that 1.5, now you're at a use of fund balance of 2.8 million. And so that's really the comparison here. You budgeted to use 5 million, in all reality, you used 2.8. I'll pause there because I know I threw a lot at you, but I just wanted to be able to show you to kind of compare apples to apples, what you approved on your budget versus what happened for the year. Any questions there? All right, I'll move forward then. So we have an ending fund balance at June 30, 20. Remember, this is one day in time. Our fund balance goes up and down as we use money and money comes in, but 23.6 million. So how is that categorized? And there's 5 fund balance categories. You'll see you only have 4 of them, and I'll explain why. The top category is called non-spendable. We cannot pay bills with these items. Inventory, prepaid expenses, the cash is out the door. It's either sitting as a credit with a vendor, or we've paid a bill ahead of time, or we have inventory on hand. We can't spend that money. The next bucket down is restricted. Restricted means that someone outside the district has restricted those funds. And as you can see in this scenario, it's Lincoln Benefit Trust. So this is the fund that you have with LBT related to your health insurance plan. So that 3.6 million is sitting with LBT and cannot be used to pay your daily bills. That's why it's essentially restricted. The next category is called committed. Committed means that you as a board have taken action. 3 items in this category, which are similar to the years before. Capital improvements, you have committed 5.75 million towards future capital needs. That 1.5 million that we talked about is sitting in that bucket. It essentially moved from unassigned to that bucket. That was that non-cash payment, essentially. It's just a move of buckets. Retirement PCERS, you've got almost 3.4 million set aside for future PCERS retirement plan increases, and this amount was set aside years ago as PCERS amounts were going up, and essentially it's being used each year towards those increases in the PCERS fund, or PCERS expenses. And then the last one here is your 21-22 budgetary reserve. So you passed a budget for the current fiscal year using 3.7 million. So essentially, by you passing that budget, you committed those funds, you made that board action to say funds on hand at the end of the year, we're using them to balance that budget the next year. We get through all of that. There is another line in there that you don't have. It's just called assigned fund balance. An example of that is if management, as part of your policy, management could earmark funds. That's not been a practice by your district. So that's why you don't see that one on here. But then everything else goes in unassigned fund balance. I'll pause there. Any questions? I love numbers, but I know not everyone does, so. All right, well then I'm gonna move forward. We kind of talked about the results at the very bottom here, a use of fund balance of 1.3 million. How did we get there? Our total revenues were just over 65 million. You can see about 68% come from local sources, about 30% from state sources, and just under 3% come from federal sources. As far as your expenses, you had just under 65 million in expenses. Instruction, no secret there, it's about 62% of that. Support services directly related to the education, that's 28%. And then you have your non-instructional, some facility acquisition and improvement, and then debt service to round out kind of the last 10% of the expenditures. That gives us this excess of revenues over expenditures, but then we do have this other category, other financing sources and uses. So you have about $7,000 for sale of goods, and then the last piece is inter-fund transfers out. This 1.4 million was transferred to the capital projects fund to be used towards projects. And that's how we got to our use of fund balance of about 1.3 million, general fund. I'm gonna switch over to food service fund now. So food service fund acts differently. It's called a proprietary fund. It is a little business. That's how we like to think about it. It is full accrual. So your food service fund at the fund level has fixed assets on it. It records depreciation. It has its portion of the pension liability, its portion of the OPEB liability, its portion of compensated absences liability. It's all encompassing. Kind of gave you a 3-year trend analysis just because this one has been a little up and down for various reasons. Taking a look in the left-hand column here, this is the year under audit. You can see operating revenues of $62,000. Significant decrease from years before, and that's because all of our child lunches are free because of the COVID pandemic. Operating expenses, pretty much right on target with prior years, right in the middle of those past 2 years of just under 1.6 million. So when we think about it as a business, it is a operating loss of just over 1.5 million. But then we have a bunch of non-operating revenues. This is going to be our state and federal money towards lunches provided, breakfast provided, snacks provided, etc. And then you also receive food. You receive USDA commodities or food from the federal government, and that value is also recorded on your financial statements. So we take all of that into consideration. We had a change in net position, or we'll call it a loss, although we don't use those words necessarily in governmental accounting, but we had a change in net position or loss on this fund of $293,000. That's a big number, especially when compared to prior years. So what I wanted to do for you is just do some additional analysis because there are non-cash items in here. So we have some adjustments to kind of bring it to kind of more of a cash basis approach. So there's some adjustments based on the PSERS liability. So every year your PSERS liability goes up. I was going to say up and down, but it mostly goes up. And every time we have to make an adjustment to that liability, there's adjustments to deferred inflows, deferred outflows, and then at the end of the day, we also have to hit our income statement for those fluctuations. So in this case, for June 30, 2021, we actually had to increase your expenses by $153,000 because of that PSERS change. So again, that was an added expense to the food service fund that was non-cash, not related to your day-to-day operations, 100% related to that change in pension liability. Same thing for OPEB, although much smaller at $11,000. And then I also put depreciation in here. I added that back in because again, it's non-cash. So and you can see the adjustments, their signs go a little bit different depending on the year, but essentially just to kind of give you a better perspective of the operations of that fund. That still brings us to a loss of the year of about $66,000. The year before, we were to the good about $34,000, and the year before that about $66,000. So obviously lots of things that can impact those results, but at least wanted to bring that forward to you as far as removing some of those wonky things that are not day-to-day and that we're used to. But in the accounting world, we have to include. Questions there?
What was the primary factor in the large difference in the loss
for this past year?
So about 153,000 of that, so about half, was a non-cash increase to your expenses related to the change in the pension liability. So that actually brings me to your pension liability and your OPEB liability. I'd just like to highlight this because it's a hot topic item, just to kind of show you what the change is each year. And I know I have a lot of numbers on here. I'll walk you through what I'm looking at. We're going to start with all the yellow. Yellow is PSERS, that's your retirement. June 30, 20, total liability was $77.5 million. We split that between, we call it governmental funds, it's really your general fund, but the governmental funds and your food service fund. It's around 2% each year. It goes up and down based on who you have being charged to your food service fund and who's in the PSERS plan. But rule of thumb, it's 2% give or take each year. So we split that out, and then when we move to June 30, 21, you can see the pension liability increased from $77.5 million to almost $82 million. So that increase then goes into different categories. That's a change in what's called deferred outflows, a change in what's called deferred inflows, and then the last piece of it is we actually hit that income statement, the revenues and the expenses. Remember, for the food service fund, because it's full accrual, it happens on those financial statements. For the general fund, they are not full accrual, so you do not see this on your fund level financial statements. It's just going to be on those government-wide, we call them GASD 34 financial statements that are included in your financial statements, but again, not the day-to-day general fund. Same thing with OPEB liability then, that's what's in blue. The total OPEB liability at June 30, 20 was $9.8 million, and this actually went down slightly to about $9.5 million. OPEB liability is two pieces. You have your own district OPEB liability OPEB plan, and then part of the PSERS plan is a small portion of other post-employment benefits that we actually pull out and include in this OPEB liability. So you can see the change. Those deferred outflows and inflows, kind of like a fancy way of saying prepaid expenses and deferred revenue, but again, it's all non-cash. Essentially, every year your actuarial valuation is completed, and in this case, obviously, you get that information from PSERS. All of those assumptions that they make in their calculations, then there's an actual that comes up with that the next year. So every time there's a difference or a change in assumption, all of those changes go into these amortized between 5 and 10 years amounts that go into those two buckets. So deferred outflows are really a type of asset, deferred inflows are really a type of liability. Questions there? And I have one more piece. I didn't want to forget about your other funds. So we talked about general fund and food service fund. You do have 3 other funds. They are all governmental funds. You have your capital projects reserve fund on the left. You can see total revenues of about $18,500, total expenditures of $1.5 million. This fund is funded by your general fund. We saw that transfer in here from the general fund. We saw the transfer out on the general fund side. You did have some sale of assets here, about $9,000. So that net change in fund balance was a decrease of about $48,000. You then have your capital project bond fund. Not a lot of activity in here until we actually took out money related to the current projects happening. So we'll actually look at these two together. This is where all of the activity related to the capital projects that you just took out debt for is happening. And this debt service fund essentially says, okay, here's the debt that we took out and essentially what happened with that debt. And you can see the $25 million that was transferred over into the capital project bond fund to then be used on the project. That is all I have, which I know is a lot, but just wanted to give you a highlight as far as what the funds did, what the results were for the year. Again, not expecting any changes or significant changes to these numbers, but if in our finalization process we would come across anything, we'll make sure that we point that out and that information is provided to you with the final.
So no material deficiencies, no corrective actions, no findings or suggestions, double thumbs up on our financial report.
So I'm not aware of any material weaknesses and significant deficiencies, but yes. We are not through all of our testing on the federal funds. I am not aware of anything at this point.
And that's such a small percentage of what we get.
It's a small percentage of the funds you receive, but it's a lot of actual testing, because we have to test a significant amount of the actual transactions. And we have to not only test the compliance with the grant, we have to test reporting, eligibility, and then we also have to test controls related to all of that. So although funding-wise, it's a small piece, it's actually a lot of testing.
Yeah, I'd like to thank Belinda and Tom and the budget office and the work with Krista, because it's a lot of back and forth between during the audit, and so appreciate the clean report, but also appreciate the working relationship that we have with Krista and her. Just a couple of things to point out, because they're the things that folks ask the most kind of at the end of an audit. And Belinda, you can answer this if it's easier, or Krista. So in comparison with years past, for this past school year, less money going back into fund balance or more money than we've seen in the past?
Less money going back into fund balance.
Okay. And what was how much would likely go back into fund balance from that audit?
We indicated that we were going to borrow, thank you, Krista. We indicated that we were going to use 5.5 million, and we ended up using 1.3, so the difference is 3.6. Going back into fund balance.
But just a reminder,
1.5
1.5 also moved out of unassigned to committed. So technically, 2.8 million of unassigned fund balance was used.
Right. So as that number goes, so basically what I'm painting a picture of is we're getting more accurate as we've tried to over the past 5 years of predicting revenues and expenditures, so that we have a better idea of those revenues and expenditures. Actually, we're predicting those in a better way. And how much we utilized 3.7 million to balance the 21-22 budget, correct? Okay, that was it.
Let me just follow up real quick, because I got confused. That was good when you talked just now, Jason. Now I'm a little confused. We used how much money out of the unassigned fund balance to make up the deficiencies that was presented to us when we passed the last budget? What amount? Do you know?
What amount did you budget, or what amount did you actually use?
No, what did we budget? Because that's when we sit down and make a budget, and we look at the end of the year when we pass a budget, and I'm going to simplify this for myself.
Sure.
We're taking from the unassigned fund balance because we say we're going to have a shortcoming, which then the board looks to see what we're going to calculate on a tax increase back to our residents. I guess my question is last year we projected we were going to pull how much from the unassigned fund?
3.7 million.
3.7 million. And then what did we actually use? That's where I got confused.
2.2.
You actually budgeted to use 5 million.
But there's 1.5 million.
Are we, so we're not including the 1.5?
Right,
Okay,
so
I
we
got you.
use 3.7 as, that's where you might have.
I'm getting,
Yeah, so it's 3.7 is the actual amount for balancing the budget. So 2.8 was used.
so as a follow-up to that, and maybe we don't know the answer yet, the board had passed before a percentage that we wouldn't go below on the unassigned fund balance. And again, I could be wrong here, but every year I've been on this board, we use from the unassigned fund balance, and then I get the audit back, and I see that unassigned fund balance has, I don't want to use the word ballooned, but it's increased or gone back and stabilized where we're at. So I'm just trying to figure out how close are we getting to that 6 to 8%?
We were at 6% when we passed this year's current budget.
And where was the projection when we go to budget this year that our unassigned fund balance will still be at 6? Or have we built some capital in there that will be bringing from the unassigned fund balance? I don't want to get into budget right now, I'm just trying to understand. Did we recoup some of that money that we're now pulling again?
Here's what, we're putting less in and still relying on more.
I understand, right, okay. Maybe I'm doing it wrong. I'll wait to see. I guess my answer is that I understand what the unassigned fund balance was and what our resolution is. So my curiosity is where's the unassigned fund balance at the end of this audit? Is it back to 8%? Is it 9%? Is it 10%? What figure is that at?
So it's at 6.6 million, or almost 6.7 million, and you do the percentage over the next year's expenses?
So the end of, so their audit is for the 21 school year. So, there's the current school year's fund balance that's in there as well. So, maybe I'm too close to it to answer it. You understand what he's asking?
Linda, I guess let me try to see if I can simplify this for myself, because maybe I'm confusing myself. Every year I've been on this board, we've looked at the unassigned fund balance to assist in balancing a budget.
Yeah.
In addition to assisting in funding that budget, or helping to assist fund that budget, we've looked at a tax increase to offset that, because we have a resolution that says 6 to 8%. So when I look at an audit, when I sat here 3 years ago, I saw that we had taken from the unassigned fund balance a certain percentage. Let's just say it went to 6. And then when I looked at an audit the final next year, I saw the unassigned fund balance sitting at 8 or 9 or 10. So I guess my question is, as we go into the budget process this year, what resources do we have on the unassigned fund balance that we can rely on as a board and stay within the 6 to 8% resolution that was passed years ago here?
It'll be the amount over 6% that was left over from the previous year.
Correct, and we do not know that figure as we sit here today.
And number-wise, at June 30, 20, your unassigned fund balance was just under 8.1 million, and at June 30, 21, you're looking at an unassigned fund balance of 6.7 million. So you decreased your unassigned fund balance from 8.1 million to 6.7 million in fiscal year 21.
So,
So in comparison with previous years, we have less left over.
which is, I suspect when we go to the budget process, and whatever proposal the administration gives us, I'm hearing a preview right now that we have less to pull from the unassigned fund balance. Would that be accurate?
Yeah, and for your current year that you're sitting in, you set aside 3.7 million to use. So obviously, depending on how this year shakes out for you, if there's any of that you don't need to use, that'll go into your unassigned fund balance.
I understand that.
I'm also providing a worksheet to show where the unassigned fund balance was over the past few years, and with a natural progression of what was being used. All for this worksheet that's been passed around. We should also share this in the FNF meeting, looking at just the unassigned fund balance in itself, not taking into consideration the budgetary reserve. Because eventually the budgetary reserve will go away as we continue to get closer and closer in budgeting. The reserve will go away, and our goal is to match our revenue and expenditure.
Right, and I agree, and I don't mean to open this up because we're gonna have plenty of time to discuss the budgetary talk, but from my perspective, being on the board for this period of time, you can see, and I understand where we're at now, where I don't want to be before, when we're sitting with excess in an unassigned fund balance, and we use it to balance a budget, and we still put a property tax out there, and then we turn around the next year and audit, and we're right back to that high mark in that unassigned fund balance. So if you're telling me the audit's going to show that our unassigned fund balance went to 6.7 million, then I can see that, and I can articulate in my head, okay, that's what we have that we can actually go to help us balance a budget. Would that be accurate? And that's the only account we're pulling from is the unassigned fund.
I have a question. So, on the food service thing, so this year our operating revenues was $61,000 because of COVID, and lunches were free, which was supposed to be paid for, at least some of it, by the Department of Ag. Am I correct?
You said it right, at least some of it.
Okay. So my question is, as that looks, it looks like that we funded the entire thing. Are we getting reimbursed by the Department of Ag for that?
So if you look at this line item right here, non-operating revenues, this is where the state and federal money comes in. So you can see there was an uptick from about 1.1 million to about 1.23 million. So there was an increase in those revenues as an offset, but obviously it was not a one-for-one offset.
Okay, so that's my question. So if the Department of Ag was gonna say we giving free lunches, they didn't say that we were funding them. You know, I would assume that the Department of Ag was funding those free lunches.
That is a funding question outside of my realm as the auditor. But yes, I mean, that's what you're seeing.
Tim, this is something that we, as a board, have argued for the better part of 6 or 7 years, but we keep getting hit with unfunded mandates, and they're not paying. They tell us we have to do X, Y, and Z. You have to give free lunches, you have to do X, you have to have this class, you have to have this program, you have to have that. And it all comes down, and they don't back any of the money, except for the taxpayers in this district.
Well, I get that. This was COVID related. Because at one point in time, the free lunches were only supposed to last till a certain time, and then they extended it for the rest of the year.
And this year.
But and this year. So the Department of Ag was the one supposed to be funding those free lunches, not the district.
This is me just taking a really kind of general stab at this and wanting to jump in, is that on paper, they are probably funding the lunches. They aren't determining how many people districts are using to serve those. Do you know what I mean? Like, so if you have one person serving your 3,000 kids lunch, you're probably in better shape than if you have, 150 people serving.
Well, true, but it doesn't look like they're funding food.
I mean,
That's my point.
we went from making a profit in 2019 and then the pandemic hit, and now we're losing.
Absolutely.
Yeah, and we're talking about a lot of money.
Yes.
Okay, that's my issue. So, but in 2020, June 30, 2020, was that the same thing? But we actually got reimbursed for it, or is that before they called for free lunches? Because we have the revenue.
You had a significant portion of the year in before the pandemic hit.
Okay.
Yeah.
Yeah, as opposed to an entire year.
Yeah, we were just hitting basically April and May at that point.
I mean, I just didn't know if it was one of those things that once you spend it, and then the federal government goes, okay, what was your number? And now it comes in, they're not paying you a little at a time, so to speak, they're giving you a lump sum, and that was something that was happening, or you had to fill out a grant for that, or you just eat it in general.
I think we're going to end up seeing this like this for some time. If we're lucky to receive a grant, we'll be lucky to offset that. If there's no initiatives right now that I'm aware of, or I can communicate to, if they're planning on going dollar for dollar.
Okay, and was that the State Department of Ag or the Federal Department of Ag that required the free lunch?
Federal department.
The other thing that I will point out is the revenue from state and federal is a direct reimbursement based on the number of meals. So you also have other factors in here as far as the number of students that are coming to school this year. Also, if you don't have anyone in the school, you also don't have adults paying for lunch. So there are other factors. So it could just also be that the number of students that you have that essentially you can claim as reimbursement has now decreased as well, and may go up or may stay the same. Who knows what's going to happen?
Sure. Yeah, there are a lot of factors that influence those numbers, but certainly COVID.
And unfortunately, sitting here for the last 5 years looking at audits, food service was a flagship here in this district. We were always operating for the good. And to look at it now, I know that when you look at a budget in its entirety, it's a small portion, but to see something that was self-sufficient, wow.
Yeah, and then that's more money that's come up with next year's budget because it's off.
Belinda, you said sometime, but isn't the fact though, as we come out of COVID era and lunches get back on, we can start to show a positive return, maybe not recoup all our losses, at once, but at least we'll be operating back in our normal figures, correct?
Yes, that's correct. There's really no initiative right now when the federal government's offering free lunches, free breakfast for the entire population. There's really no initiative to pay, and there's no need to. So until then, until we come away from that free and reduced, we will see a change in our
don't want to be misrepresented. I'm okay with the free and reduced. I understand that people are hurting, but we have to take that into account when we look at everything and see where we're moving in the future. When you start to see a trend that we're losing in the last 5 or 6 years I've been on this board, you've committed food services, you went through bird service, like, good, you're good there, and we moved on.
And I can't do that at all districts either.
Right.
But that's why I did feel, and I have to say, poor Tom, when I gave him the entry for PCERS, he was like, we can't take this on food service. And that's why I want to point out, like, obviously there are some factors outside your control here that are really magnifying this issue this year. So I wanted to make sure we could pull those out and compare apples to apples. But yeah, until you've got people paying for lunch, there's only so much that you can do.
Thanks for the thorough report, as always, Chris.
Oh, you're welcome. And I just have to say thank you to Belinda and Tom. I always say the definition of an auditor is to be a pain in the butt, which I'm good at. So I really appreciate them keeping everything organized, getting my team and I everything we need. And thank you again to the board for the relationship. I really enjoyed working with all of you, and I'm always here if there's any questions. So we will work hard on getting this finalized and wrapped up here, and I'll be back for next year in no time. So.
Thank you so much. Just one quick question. When do you anticipate the final version?
I would say in 2 weeks. We need to get the draft out to Belinda and Tom to give them their opportunity to do the MD&A and go through their review. So I would say a reasonable timeline would be 2 weeks. We'll have the final.
Thank you so much.
Yep. Thanks, everyone.
Thank you.
Board committee reports. Any of that?
Well, like it or lump it, it's budget season, so I want to briefly go over what's happening in our state and what's happening nationally that really go hand in hand and affect us greatly. Tomorrow is February 8th. Governor Wolf will present his 2022 and 23 budget proposal before the Senate and the House of Representatives. With the state showing surplus of revenue, the governor is expected to include critical increases for basic and special education in his proposed spending plan. Nationally, we have the 2022 spending plan, but unfortunately, it's incredibly uncertain right now. With the House and Senate, there's no public progress in resolving the fiscal year 2022 appropriations. The current short-term extension of government funding expires on the 18th. Unless House and Senate appropriation leaders act very quickly on the top line spending and the split between defense and non-defense spending, there will be time to agree on the problematic funding levels, which means that Congress would need to extend the current funding for the third time to keep government open while negotiations continue. So this week, there's rumors that on the continued resolution, which I'm going to call CR, that it might be needed, which is a temporary extension through April, was hitting the rumor mill, regardless of the length of the CR. It is certain that the FY spending will ultimately be resolved in this measures. So what we have here is while there's still a fully CT versus detailed package. What that's going to mean is that later it's more likely an effort to be supported and needed the complete and processed work. As we move forward, we really need to keep a close eye on what's happening within our state and within our nation. But I look forward to really giving us a brief rundown. There's a lot happening and a lot happening in the next few days. So keep your news on. Thank you.
Thank you, Eva. I don't believe there's any other board committee reports, program reports.
It is coming up on the calendar, February 18th and 21st, no school for students. As February 21st is President's Day holiday, the next board meeting is Tuesday, February 22nd. The next board meeting will be 2/3 of the way through winter. Yeah, I'd like to congratulate Coach Haynes and the rest of the coaches and all the kids for up at Saturday in the District 3 championship. Great job for all of those folks and all those families that were up there supporting them.
A couple housekeeping items here. Our next board meeting will be February 22nd, 7 p.m. Unless otherwise noted, we'll always be here at the administration building. I know we have our scheduled renovation coming in, so we may have a little change of timing there, but I'm certainly get that out to the public and to the board well in advance. We could go to the order out of the board, but I know we have one member who wanted to put something out representing our district. Michelle?
On Saturday, I attended the Adams County Band Festival in Roxford. And we had 13 junior high students who attended and 15 senior high students who were in the band festival. And is it okay if I read them? For junior high, we had Paul Kennedy, Ava Fair, Ali Patel, Nicole Basis, Kenzie Kuhn, Emma Warlock, Nico Basharendi, Tessa Trax, Morgan Redding, Ruby Schwartz, Nicole Roser, Audrey Tax, and Gavin Nevada. And senior high, and I admit that I'm mentioning this because my kid is in band. Ashton Arndt, Leah Bordado, Riley Sharp, Grace Miller, Bryce Myers, Bryce Riddle, Summer Johnson, Taylor Clippinger, Patrick Flaherty, Zeb Beardorf, Connor Peterman, Daniel Sterner, Ken Heisman, Austin Lee, and Spencer Kennedy. And I'm sorry, but I don't think our band kids
No.
get enough attention.
No, and I think you're right, and you could probably say a heck of a lot more in the district, so it's nice you brought that to everyone's attention. Okay, tomorrow at 4 o'clock is a policy meeting here, and the reason I say that is immediately following that at 4:30, the board members that are present for that will meet in administrative conference in reference to the safety committee, safety type of issue. So if you can attend the policy meeting, that's great. If you can't, the board will have an administrative conference here at 4:30 if you haven't done it. May I have a motion to adjourn? I'm sorry. May I have a motion to adjourn?
Motion.
We stand adjourned. Thank you.